Hello everybody and welcome back to the Financial Projections Excel spreadsheet. We just have to be finished off the time interest earned and a few more to do on the financial projection model, and I'll move on and start the free cash flow, whatever needs to be calculated on the free cash flow sheet, which is the next one. So after I got the time interest earned, I successfully inputted the if statements on the relevant details that needed to be on the calculations. Okay, so let's move on and go through the next heading. It is called total debt to assets. Yes, very well. Now let's move on to the short-term debt to assets. Okay, now the next heading. Okay, so the mistake that I've been through, it's been fixed successfully. Looking through so you can all have a look and see how it calculates the short term and the long term. The long term is short to calculate. The short term one is longer. Okay, let's move on and let's calculate the debts to equity. Well, now let's calculate the earnings per share. Well, yeah, let's move on and calculate the current ratio. Now let's calculate the quick ratio. Okay, just a few more left, and then I'll move on to this sheet, free cash flow. Okay, so accounts receivable turnover. Yeah, I'll show you how to calculate that. A62 divided by B83. Okay, now the average collection period. Now, the next one is the inventory turnover. And then the last one, well, last second heading is the fixed asset turnover. Yeah, cash flow return on assets. Okay, here's how to get the straight correct answer for this sheet. This heading. Let's go. Cash flow. I'm relating the next sheet in. Right, now we can see why there's no answers here, because there's nothing input in the free cash flow in any of the answers yet. So we'll do that now. So meaning that is now financial projection model finished. We'll get 0 answers that are here from the next sheet. So let's move on. This is the free cash flow statement sheet. Now, here it relates to B60, C60, the year's inputs from the financial projection model sheet. Okay, let's read this. This is the basis for the indirect methods calculation of the FCF, earnings before interest and tax, EBIT. So now we need to calculate the years that are input on the earnings before interest and taxes. That's correct. Exclamation mark B70. This will be D70. C70. This will be D70. Okay, let's read that on the next. D70, D70, E70, F70, G70. So since there's no numbers here, it's because the box is very small. I have to make it bigger. Just have to change the width. There you go. Now I can see the number figures for the answer of the relevant year input of the earnings before interest and taxes. Okay, plus depreciation is going to be the next one. Before I calculate it, let's read the line. So depreciation is a non-cash expense and therefore is added back to calculate the cash flow. What's below? Should be called cash flow. Change that to F. Okay, now let's go and calculate the plus depreciation. That's very good. That is correct. Now, next heading, deducted, since this is cash that cannot freely be used to pay dividends, pay back shares, or repay loans, and therefore is deducted from CFO to arrive at FCF. This is called minus net increase in property, plants, and equipment at cost. Okay, let's do that now. Right, that's correct. So that's how you calculate the minus net increase table in property, plant, and equipment cost. Financial projection model, exclamation mark, comment, C86 minus, same heading again from B86 bracket. Okay, let's move on to the next heading. Now, we're running out of time, so I'm going to quickly do this and then do the next sum in the next video. Yep. Right, so we'll continue and do the minus increase in inventories in the next video. So we're almost already nearly finished the free cash flow. So stay tuned for the next video. So I hope you all enjoyed this so far. Wash your hands and have a good pleasant evening and see you all soon. Adios.